What's up, guys? Eric here. Stock market's selling off. I want to bring you a quick update here today. So yesterday we had the Fed tell us that they're not going to raise interest rates for this month, but alluded to another rate hike in November. And the big thing, the big news yesterday really came down to the dot plot. Many were thinking that next year, by the end of 2024, you'd see something like a 4.5% federal funds rate. Right now, we're at 5.25 to 5.5. They're keeping that steady. Now, the dot plot is showing us that the end of 2024 is going to look closer to 5.1% versus 4.5%. So interest rates higher for longer. Now, this drove Treasury yields higher, and that's part of the reason why stocks are selling off, especially technology stocks. So anything that's a higher valuation type stock, generally risk off. So just this morning, the 10-year Treasury yield almost hit 4.5%. It was at 4.48%. That's the highest in over 15 years. And the 2-year Treasury topped out at 5.19% after the jobs data this morning. That's another thing. So macro is definitely moving the markets here. But the 2-year Treasury, looking at yields of 5.19%, that's the highest level since 2007. Now, looking at the QQQ, this is the NASDAQ 100, not the NASDAQ Composite, but the NASDAQ 100 ETF. The QQQ is trading just below $360 a share right now. You can see the 52-week low was $254.26. 52-week high was just recently here, $387.98. Now, in the most recent sell-off, we got to about $354 on the QQQ. And to get a correction, you need 10% from the top. So you take that $387.98, take 10% off. We need to get below $350 a share. We didn't get quite there. We were at $354. And right now we're about $5 higher than that previous low. So we do chart day every single Wednesday, Patreon Discord. And just this Wednesday, we talked about 384 is the resistance for QQQ. It really needs to capture 384 or you're going to see some downside. And of course, we had macro news, lots of macro news over the last couple of days that's been negative for the markets. So your downside now is $340 to $355. It could hold up that, 354, 355 retest area. It doesn't have to go that low. That's just the next support area. And if you're looking at a chart, the S3 on here is around $343 and the 200-day moving average is about $327. So you can see over the past 5 days, we're down 4.31%. Over the past month, it's basically flat, which you might be surprised to see. Still up almost 16% over the past 6 months, up 36% year to date, and over the past year, up 27% or so. So if you're a new investor, you might be freaking out, and this is where it really tests that psychology, especially if you're invested in lower quality names, more speculative names. They're much more volatile, and you're doing much worse than what the QQQ is doing. And I'll give you a great example. Indie Semiconductor. This is one of my favorite spec stocks. And we talk about spec, this was a SPAC. It's speculative. People are wondering, why has it been so volatile? This stock ripped from basically under $6 a share here early January, ripped all the way up to $11.12. And now it's pulled back. It's trading today around $6.20. So this is pretty much a round trip. This is parabolic. Traders pumped this up and then it fell off a cliff, bounced up again. This would be a great stock if you're a swing trader to buy these lows and kind of sell these tops. But obviously, if you're an investor and you're trying to hold 5 years, it can be very frustrating. And so you see this, you're like, I should have bought here and sold here. At the end of the day, you got to do what's best for your money. I generally like to buy stocks, hold them for 5 years. If something goes parabolic, I trim. At $11 a share, I honestly think that Indie Semiconductor will probably be $15, $20 if you hold it for 3, 4, 5 years. But you got to look at the macro. So you have all these different macro conditions. You've got semiconductors slowing down. We've got news from Taiwan Semiconductor. The auto market's starting to slow down. There's also issues right now with striking with the auto market. That's part of it. I think people are missing that. Indie Semiconductor is focused on automotive. If you got less people making cars, less cars coming off assembly lines, well, it's going to impact a company like Indie. So take the fact that it's a speculative stock. It's not profitable. It's burning cash, doesn't have free cash flow, was a SPAC in a cyclical industry, which is semiconductors and semiconductor equipment, and the fact that it's focused on automotive. Take all those things together and you can see why the stock has sold off. When the economy recovers, goes the other way, what's going to happen? It's going to do the same thing and go back up to $10 plus. But you got to have that patience and you got to be able to ride out the volatility. And I tell most people they probably shouldn't own a stock like Indie Semiconductor because it's extremely volatile and it's high risk reward. It's what we call a spec stock. So for me, I've been nibbling a little bit here in this $6 range. I think 607 this morning. If it gets below $6 in the fives, I think it's a decent opportunity. But you have to understand what the stock is. You have to have the risk tolerance and the stomach and the risk appetite for something like Indie. So let's switch gears here to a higher quality name. This is ASML. This is my primary focus right now in my primary taxable brokerage. And ASML, I like this stock, under $600. You can see it's broke past the S3. And this morning I bought some more shares around $584, $585. I think it could go lower. It's possible that it even goes below $550. It's not necessarily a cheap stock if you're looking at things like PE ratio, but if you're looking at forward metrics and the moat they have, I think if you're holding this 3, 4, 5 years, if you're buying these levels, I think you'll be happy, even though it could go a little bit lower. So another stock that I like here is Paycom, and I think this could go lower as well. I'd like to see it below $250. It might not happen. There's a possibility, this is just a possibility that it bounced kind of off this level. And I could see this 260 or under, even 250 or under. Right now it's at 265. The last stock I just talked about, ASML, does pay a dividend, a little over 1% dividend. Paycom also pays about a 0.5% dividend. So this is a DGIF type play. It's a SaaS company. It's funny because Kramer came on Lightning Round the other day. Someone called in and said, do you like Paycom? He said, I don't really like fintech stocks. This isn't a fintech stock. This is HCM, enterprise HCM, so human capital management. They started really in payroll and they've branched out from there. And this is going to be software as a service, and it's really focused on HCM again, human capital management, and it's focused more on SMB, so those smaller mid-sized businesses. Of course, small and mid-sized businesses are more impacted by the economic events, by the macro. So you have to be a little bit patient with Paycom, but I do think if you're accumulating, especially 250 or less, this would be a good opportunity. It's a higher quality name, profitable, has a PE ratio, pays a dividend, all those good things. Another higher quality name we've talked about several times in the channel, and this is going to be maybe a little bit riskier than something like an ASML, but I still think that this is an attractive stock, especially at these levels. Right now it's trading at 123. We said we really liked it below 120. We were adding this pretty heavily in Discord, under $120 a share in both portfolios, and then several other members. If you're not familiar, we have a Discord community, and elite tier or higher, we've got an investing trade floor where all the members share their buys and sells in real time. And it's very helpful, not to make herd mentality or give you a recommendation to buy, but to show you when, hey, this stock is down at this price, maybe it's something you should look at a little bit more closely. So I have people ask me all the time, which stocks to buy? I want some, different stock ideas to buy. Check out Discord, because there's a ton of different stocks that we don't even talk about on the YouTube channel that are covered in Discord and that people are buying in Discord every single day. Now, this is getting really interesting, and fintech is tough. It's really hard. This entire sector is getting beat down. You think of PayPal, you think of Adyen, Marqeta, all of them have been really kind of beat down. When I look at Square and I go back in time and I look at the chart of Square and where it's at right now, I'm not saying that this is necessarily a reason to buy, but it's at 52-week lows. And really, if you zoom the chart out, it's trading right now at $46 a share. So I'd have to go to a max chart to even get there. And this is basically beginning February of 2018. So you're talking about, 5.5 years, this stock is trading at the same levels. Now, if you go all the way back to the IPO price in 2015, it was $12.85. So it's up 258% all time. But over the past 5.5 years, this stock is flat. Again, not a reason necessarily just to go buy it. And this S3 is closer to $38, $39. So it could even break 40. But for me personally, if this gets below 45, I think it's something at least to consider, to look at more closely. You have to do your own homework, make your own decisions, do your own due diligence, because this might not be for you. It's a fintech. There is some risk behind it. It's not a cheap stock or anything like that. At the same time, price to sales ratio here is showing 2.04. So that's not terrible. But heading back to this chart here, it's really broken down, and you can see it's just falling off a cliff, and it can always go lower. But for me personally, under $40 is not impossible. I do own some shares of this. I've had it for a little while. I'm basically flat, slightly down on it. I'm considering to add more shares. Fintech is tough. This is one of maybe a couple fintech plays. I think there's only 1% of my entire portfolio in fintech, and it's basically all in Square. And to kind of mix things up a little bit, this is another dividend stock. So we covered ASML, has a dividend, but it's not very high. It's 1%. We also covered Paycom's got about a 0.5% dividend. This is Tractor Supply Company. So this is a $22 billion market cap, dividend a little over 2%. So still not a high dividend. This is more of a DGIF. P ratio right now, this is a 12-month trailing, is around 20. And you can see that 52-week high was up there at $251. 52-week low was 181. So I certainly think this could go below $200 a share. I've been telling the gang that I like this one. If you look at it, 210 or less DCA, prefer even 205 or less, and it could go below $200. So looking at this chart, this S3 is down here at 197. I think if it gets below $200, that's a pretty strong opportunity. It may or may not happen, but right now trading at $204. $500 if you're thinking of long-term investment, I do like Tractor Supply Company. So if you're not familiar with our Discord community, this is Discord right here. There's a channel called Investing Trade Floor. You have to be an elite to see it. So there's different channels and different permissions depending on what tier you sign up for. If you really want to be where all the action is, you have to be really an elite. But just to show you guys some of the diversity here, we've got, MSTR in here. We've got Square, AMD, C Limited, ASML, Snowflake, Tractor Supply Company. We got Cloudflare, Amazon, Indie, C Limited again. We got Skywater. We got SOX. That's the ETF, semiconductor ETF. Paycom, Tractor Supply Company, Confluent, HCP, Skywater again. We've got PGNY. We've got every AMD is in there. ASML again. There's another BN and FNNT. So Fortinet. We've got Google in here. And this is just over the last, this is just this morning. I'm at that this morning, 8:44 a.m. So there's more above it. So I don't want to, give away everything, but I want to at least show you guys what you can get if you join our community. And it's not just this. There's channels on due diligence. So you come in and you've got a channel just for Unity. So someone's posting this morning. Here's more John Dredd talking about Unity, what's going on with Unity. It's just a way to keep up with all the things that are going on in the market and to do it in real time. For me to create a video, I've got to create a video. I've got to edit it. I've got to publish it. It comes out later at night because that's when most people are going to watch it. Discord is real time. Boom. I buy something. I share it with you in my portfolio channel. If I've got two different portfolios. I've got Eric's primary portfolio, so my main taxable brokerage, then I have the community portfolio, the Fired Up Wealth community portfolio. Every time I make a buy, I post a screenshot, and I actually will tell you exactly what I bought. So there's a watch list there. Investing Club portfolio. So this morning, Indie Semiconductor, $6.07. Tell you exactly what we're buying, and you can scroll up and everything in there, all the buys. There's exclusive videos in here that are literally pasted into Discord. You don't even have to go anywhere. You can just watch them right on Discord, or you can actually go to Patreon and there's, all the videos are posted on there as well. But we provide so much information. In Elite, we do live streams Monday, Wednesday, and Friday. So Monday and Friday are going to be audio podcast record. They're live. They're also recorded and posted on Patreon. And then every Wednesday we do chart day. And on chart day, I'm showing you charts like I did earlier, telling you the stocks, that the community is interested in, different price levels to look for, and so on. So definitely consider joining us. But those are some stock ideas for you to consider. When you look at the market overall, I think we're going to continue to see some volatility. I think you could get a little bit lower on the QQQ, but at the same time, I think the market wants to look forward at some point. And I think that sometime between now and early next year, you're going to see the market looking forward and it's going to push higher. It really has, on the QQQ, you have to get really over like $404, something like that to break into a new bull market and hopefully have a secular bull market. We also do have an election year next year. So that could actually be a positive for the market overall. So appreciate you guys watching. Make sure if you're new here, subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.